Good morning, this is Larry McMillan with a stock market update on Monday, October 24th. So S&P is still trying to put in a trading bottom based on the lows of a couple of weeks ago, and it still has a chance to actually do that. A breakout over 3,800 would be the number one thing that would have to be accomplished in order to say that this is more than just some mere oversold rally. I also should mention that we're coming up on the end of October. That's usually a very seasonally bullish period, at least right at the end of October, say between October 27th and November 2nd. So that's a little seasonal boost that the market might get there as well. Meanwhile, though, it has failed in this 3,750 to 3,800 area several times. And if it can't break through there, then we're probably going to retest the lows and we might go, lower before eventually finding some sort of bottom. But right now, there's a good chance that trading bottom is in place. And I say that because, as you'll see, a number of our indicators are turning positive. So one of those is the McMillan volatility band buy signal that's in place. It's been in place for a couple of weeks. And it did not get stopped out on that move downwards. And so now has a target of about 3,900 on the upside. There's been improvement in the equity-only put-call ratios as well as the total put-call ratio, and all three of those are on a buy signal. We have a system built around the total put-call ratio, and it's calling for a move to 3,820. Obviously, that's above 3,800, and so that would indicate that breakout would be taking place. We'll see, though, if all these things do come together. Breadth improved a lot on Friday, but we are requiring at least 2 days of positive breadth before we would act on a new buy signal from the breadth oscillator, so that has not occurred. Today the market is up, and so we might get that second day, but we'll make that decision later when we come to it. The number of new highs on the New York Stock Exchange has not expanded much, so that indicator remains bearish as it has since last April. That brings us to VIX. Now, VIX is still hovering at a relatively high level in the high 20s, but it has retreated enough from its high to generate what we call a VIX spike peak buy signal. That took effect on October, I believe, 14th and 18th. And so that has a short-term, 1 month, say, time horizon. And while those have not been all that successful in recent months, the indicator does have a long and positive track record. On the other hand, the trend of VIX remains upward since VIX is well above its 200-day moving average. And that trend, that intermediate term signal, is still bearish for the market. So the intermediate term signals, meaning the trend of SPX, which is downward, and the trend of VIX, which is upward, are still not changing. And so for that reason, we're maintaining a core bearish position. We will trade these other indicators, these other signals around that as they occur, including the seasonal signal that's coming up later this week. So if you want to stay up to date on these things daily, I invite you to subscribe to some of our daily newsletters and take a visit to our website. Take a look around. We just wrote an article about how option traders should be using T-bills to improve the overall return by investing your excess cash, which can still act as collateral for option trades, into T-bills. Anyway, have a great week trading, and talk to you next week.